All right, today we're diving into a really interesting one. It's one of the most talked about microcap stocks in the whole AI space, Datavault AI, ticker DVLT. So the big question is this the next big thing, or is it just a classic story of hype meeting a really harsh reality? Let's dig in and find out.
So picture this. It's January 9th, 2026, and boom, a drop of nearly 7% in a single day. Now, while the rest of the market was kind of just chugging along, DVLT's stock was flashing some serious warning signs. And that one day, it really started to reveal this dramatic story of aggressive corporate moves and, a whole lot of really confused investors.
And yeah, that brings us right to the heart of it. The central question that I think every retail investor is asking themselves right now. Are we looking at a ground floor opportunity here? A future AI giant in the making? Or is this just a classic penny stock trap, all fueled by hype and pretty much destined for a fall? That's the dilemma. Okay, first things first. To really get a handle on DVLT, you have to understand the contradictions that are right at its core. Seriously, the signals this company is sending out to the market are, well, they're super confusing. And that's exactly where both the risk and, hey, the potential opportunity really lie.
You see, that big price drop we just saw, it kind of hides what's really going on. This is a company in the middle of a massive transformation. We're not talking about some brand new AI startup here. Nope. This is actually a legacy company that has completely shed its old skin to bet literally everything on the booming data economy.
So let's start with the bull case, right? Why are some investors getting so incredibly excited about this? Well, it all boils down to an incredibly ambitious vision for the future of AI and, just as important, data infrastructure.
Okay, to really get their vision, you gotta look at where they came from. The company actually started out as WISA Technologies. They were in the wireless audio game, a totally respectable business, but not exactly world-changing stuff. Then came the big pivot. They jumped into data monetization with something called the Information Data Exchange, the IDE. The idea was to let companies trade data like a commodity. And all of that brings us to today, Datavault AI, a company that's laser-focused on the critical infrastructure for what's called edge computing.
And honestly, the sheer scale of their ambition it's staggering. I mean, they've partnered with a giant like IBM to bring powerful AI, we're talking Watson X, to local networks. That's what we mean by the edge. They're already building out these GPU-powered networks in huge, data-dense cities like New York and Philly, with a plan for a 100-city rollout of their Sanctum infrastructure. And get this, they're even using super secure, quantum-encrypted tech to tokenize data, solving huge integrity problems for massive sectors like insurance and healthcare. This is that blue sky potential that has the bulls so fired up.
And all of this vision, this huge ambition, it all culminates in this one number, $50 million. That's their revenue target for 2026. I mean, what a massive goal, right? If they can actually hit that, it would completely change the valuation of this company, period. This is the promise, the big story they're selling to the market.
But promises are one thing, right? Now we've got to flip the coin over and look at the other side. And that is the, let's call it, difficult, on-the-ground financial reality that's creating so much skepticism and all this downward pressure on the stock.
And really, this slide gets to the absolute core of the conflict. On one hand, you have the promise, right? The massive $50 million revenue target, the partnership with IBM. But then you look at the other side, the reality. A cash position under $2 million, and, maybe more importantly, major selling from the insiders, the very people who are closest to the action.
Let's look at some of the hard data here. A major shareholder group, they're called Silex, just recently sold, wait for it, 4.8 million shares. Now, when a massive block of shares like that just hits the open market, it's going to create immediate downward pressure. No way around it. But the really crucial point here isn't just that they sold, it's when they sold. See, the stock right now is trading for under $1, but Silex, they sold their shares at an average price of $1.20. Think about that. When insiders are taking profits at a price that's higher than what it's trading for now, well, that sends a really powerful signal to the market about their confidence or, maybe their lack of it.
All right, another major headwind for investors here is something called dilution. And to put it simply, this is when the company basically creates new shares out of thin air. And what that does is it makes every single share that you already own a slightly smaller piece of the whole pie. And look, this isn't just some theoretical risk we're talking about. DVLT just announced they're issuing 7.5 million new shares, and they're doing it to pay for intellectual property rights. That is a direct, immediate dilution event for every single shareholder.
And then
Then there's this very unconventional warrant plan. So warrants are basically just options that let you buy shares at a set price down the road. Okay, simple enough. But the company is issuing these with an exercise price of $5. $5! With the stock currently under $1, the price would need to jump by over 400% just for these warrants to even be worth anything. It's a massive, massive bet on the future, and, it's exactly the kind of thing that short sellers look at and see as a big sign of desperation.
So all of these conflicting signals, right? You've got the huge vision on one side and the really tough financials on the other, and it's turned DVLT into a true market battleground. It's really pitting those institutional short sellers against a very, very vocal retail investor community.
Now, to really understand the bear case, you got to get what short interest is. All it is, essentially, is the number of shares that are being used to bet against the company. So investors who are shorting are going to profit if the stock price goes down.
Okay, so right now, DVLT's short interest is sitting around 7%. Now, I know that might not sound like a huge number, but trust me, it is very significant for a stock that has what's called a low float. That just means there aren't that many shares available for the public to trade. So with all that heavy insider ownership, that 7%, it represents some major downward pressure, and it shows that there's a pretty dedicated group of people out there betting on its failure.
And as you can probably guess, this has totally polarized the retail community. The bulls, they see things like the hiring of a high-profile lawyer, Mark Kozowitz, and they think, okay, the company's gearing up to fiercely defend its valuable tech. But then the bears, they point to stuff like tying warrants to a Dream Bull meme coin, and they just see it as a gimmick, something that could scare away serious long-term institutional money.
So with all this chaos, all this contradiction, what actually matters? What should you be looking at? Well, if you're following this story, here are the key catalysts and the data points that you really need to be monitoring closely.
Okay, first up, keep a close eye on the big CES showcase. We're looking for any concrete technology or partnership announcements there. Number 2, circle February 21st on your calendar. That's when we get the final terms of that warrant agreement, and that is going to be critical. Third, you have to watch the short interest data. Check sites like Fintel. If you see that number start to drop, that could signal a big reversal. And finally, and honestly, this is the most important one, it all comes down to revenue. We need to see real hard numbers coming out of those edge networks in New York and Philly, period.
This quote really sums it up perfectly. The idea of a smooth ride here, that's gone. It's been replaced by the reality of a messy, super volatile fight. This is exactly what it looks like when a tiny little microcap company with huge dreams tries to play in a billion-dollar arena with all the giants.
And so, at the end of the day, that leaves us with the ultimate question, doesn't it? You have the bull case, which is built entirely on potentially world-changing technology, and then you have the bear case, built on some really shaky financials and a whole lot of dilution. So in the end, which one is going to win out? That is the multi-million-dollar question that the market is trying to figure out right now.